Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Keppel Ltd is facing some legal challenges in Indonesia that investors should keep an eye on. The company, which was incorporated back in 1968 and listed on the SGX main board in 1980, announced on Monday that its wholly owned subsidiary, Keppel Investama, is caught in a civil action over land ownership rights in Jakarta. Here's the situation. An individual named Tumpul Huta Barat has started legal proceedings against Keppel's subsidiary, claiming he's the rightful owner of land plots measuring about 2,500 square meters. This isn't just any land. It's where the International Financial Center Jakarta Tower 2 building complex sits. Mr. Huta wants the court to declare him the legal owner and is seeking compensation of around 2.28 trillion rupiah, which converts to about $186.3 million in Singapore dollars. He also wants any unused land returned to him. This is definitely something to watch as it could impact Keppel's operations in Indonesia. Keppel shares closed at 666 on Friday, down 0.6% or 0.04. For those unfamiliar with Keppel, it's a global asset manager and operator with strong expertise in sustainability solutions across infrastructure, real estate, and connectivity sectors. The company operates in more than 20 countries worldwide and creates value through its investment platforms and diverse asset portfolios. The trading volume has been moderate, and technically speaking, the stock has been trading in a range. This legal challenge adds an element of uncertainty, so keep an eye on how management addresses this issue in upcoming statements. Some positive news from ground handler SATS. The company just signed a memorandum of understanding with Vietnam Airlines to build and operate an air cargo terminal at Vietnam's New Long Thanh International Airport. This is a smart strategic move that could expand SAT's footprint in Southeast Asia. Under this agreement, both companies will share best practices, productivity indicators, and technologies to improve operational efficiency and service quality. This partnership aims to boost the state-owned carrier's cargo handling capabilities, which could translate into new revenue streams for SATS. SATS shares ended Friday's trading session at 303, up a modest 0.3% or 0.01 after the announcement. Looking at their financials, SATS has a market cap of about $467 billion and revenue of $551 billion. Their PE ratio stands at 23.49, which is somewhat high but not unusual for a company with growth prospects. For context, SATS was founded in 1972 and currently employs around 50,000 people. The stock has performed well over the past year, up 19.69%. The company's beta of 0.93 suggests it's slightly less volatile than the broader market. Trading volume on Friday was 3,114,800 shares, below the average volume of 8,476,365, indicating moderate interest in the stock following the announcement. From a technical standpoint, SATS is trading near the lower end of its 52-week range of 240 to 4.08, with an RSI of 3770, suggesting it's neither overbought nor oversold. The next earnings date is scheduled for February 20th, 2025, which will give us more insight into how these strategic initiatives are impacting the bottom line. Far East Orchard is dealing with some cybersecurity issues that investors should be aware of. The company announced on Friday that hotels under its hospitality joint venture, Toga Hotel Holdings Unit Trust, were hit by a cybersecurity incident. The attack affected networks under TFE Hotels, which is the joint venture's operating business. The good news is that TFE Hotels has reported that systems in many of the affected hotels have already been restored, and the hotels can continue serving guests. They're working with cyber experts to fully restore operations across their network. Far East Orchard shares closed flat at 1.03 before the announcement. For those not familiar with Far East Orchard, it's currently trading at a trailing 12-month PB multiple of 0.40x, which represents a significant discount compared to its hospitality peers at 0.81x, and its PBSA, purpose-built student accommodation, peers at 0.64x. The company has been pivoting away from lumpy residential business to focus more on recurring income from its hospitality and PBSA portfolio. This cybersecurity incident highlights the growing risks that hospitality companies face in our increasingly digital world. While the immediate impact seems contained, investors should monitor whether this incident leads to any reputational damage or additional costs for cybersecurity measures going forward. Now let's talk about iFast Corporation, which has been getting some analyst attention lately. DBS Group research analyst Ling Li Kang has maintained a buy rating on iFast with an increased target price of $10.88, up from $10.23. The analyst believes iFast is well positioned to benefit from Asia's rising wealth population. iFast Corporation, for those who aren't familiar, provides investment products and services across Singapore, Hong Kong, Malaysia, China, and the United Kingdom. The company operates through both business-to-business and business-to-consumer divisions, offering various platforms like FSM1 for self-directed investors and iFast Central for investment products and operational support. Looking at recent performance, iFast has been on fire. The company's net profit increased by a whopping 46.3% year-over-year to $19.28 million in Q4 2024, while gross revenue jumped 26.7% to $104.14 million. This growth was driven by their core wealth management platform business and a turnaround at iFast Global Bank, which achieved a net profit of $0.30 million in Q4 2024, compared to a loss of $2.57 million in the same quarter the previous year. The company recently appointed Vincent Tong as CEO for its Singapore subsidiary iFast Financial, effective March 3, 2025. The group's CEO and chairman, Lim Chung Chun, had been serving in both roles, but will now focus on overseeing the group's growth across global markets. Tong has been with iFast Financial since 2007 and has served in several divisions, including the B2B division since 2022. iFast shares closed at 7.74 on Monday, down 0.386% from 7.77. The stock has fallen for 7 consecutive days and is down 6.41% over the last 10 days. Trading volume has decreased along with the price, which some technical analysts consider a positive sign. Despite the recent pullback, DBS sees significant upside potential, with their target price suggesting about 40% upside from current levels. Looking at the broader Singapore market, the manufacturing sector is expected to sustain robust economic growth in 2025, driven by strong demand for AI data centers and servers, alongside increasing adoption of high-performance chips and consumer devices. With continued strong demand for semiconductors, Singapore is likely to maintain solid electronics-led export growth in 2025. In the banking sector, analysts anticipate stable net interest income for the 3 major banks in 2025 as they continue to manage deposit costs, increase investments in fixed-rate assets, and extend portfolio durations to mitigate margin compression. For REITs, the outlook remains cautious for 2025 given the resurgence of inflationary pressures and potential trade disruptions from new U.S. trade policies. A selective approach is recommended for investors interested in this sector. Despite the stellar performance of the Straits Times Index in 2024, valuations remain attractive, with some analysts projecting an upside potential of 23.6% for the STI Index in 2025. That wraps up today's Singapore Market Digest. I'm Iggy from the Investing Iguana, reminding you to do your own research before making any investment decisions. The stocks we discussed today, Keppel, SATS, Far East Orchard, and iFast, all present interesting opportunities and challenges in the current market environment. Stay informed, stay curious, and I'll see you in the next update.